Now we will look at the Retirement Savings Contribution Credit, which is also known as the Savers Credit. Resources for this credit are Publication 4012 Tab G and Publication 4491, Lesson 25. The primary goal of the credit is to encourage low and middle income workers to save for retirement. So they must have earned income, and the credit is based on retirement contribution amount made and the taxpayer's adjusted gross income. In order to qualify for the Retirement Savings Contribution Credit, a taxpayer must be at least 18 years of age, not be a dependent, and not be a full-time student. This is a non-refundable credit, and it's designed for taxpayers who make voluntary contributions to a qualified retirement plan. Now, this would not apply to money that a taxpayer is required to make to a qualified retirement plan. As examples, the military or state employee, where money is automatically invested into a retirement plan for them. Income phase-out limits apply to these credits. Now, in Publication 4012, on page G19.2, you can see a table of the various percentages of contributions and what the income ranges are. And you can see where the income range actually phases out completely. Now, you can find a Retirement Savers Credit Screening Sheet on page 17 of Tab G in Publication 4012. Now, if you're dealing with this at all, you should go to that screening sheet and walk through it. Now, the credit is reported on Form 8880. It's an IRS form that would be attached to the tax return if somebody were to actually qualify for this credit. Now, there are ways to modify the adjusted gross income for a taxpayer such that they could qualify for the Retirement Savings Contribution Credit, or maybe qualify for a higher percentage of their contribution being given to them in a credit. So if you find a taxpayer that's close to qualifying, or that maybe has income a little bit too high and doesn't qualify for the Retirement Savings Contribution Credit, but they're close, you might want to suggest to them that they make a contribution to an existing IRA, or if they don't already have an IRA, recommend they open an IRA and put money into it so that they can get a deduction, which would be an adjustment to income that would lower their adjusted gross income. Now, once they lower their adjusted gross income, they might then qualify for the Retirement Savings Contribution Credit, or if they'd already qualified for the credit, their AGI, their adjusted gross income, might be lowered to the point where the credit would be larger than it was before their AGI was lowered. Now, if you look at the table in Publication 4012, you'll see that the lower the income, the higher the percentage of the contribution that would be given back to them as a credit. So it's something to consider, and it could help the taxpayer. Let's talk about the contributions that are eligible for a Retirement Savings Contribution Credit. Generally, these would be payroll contributions entered on a W-2 and entered in Box 12. Now, as long as they have certain codes that identify those contributions as being voluntary rather than mandatory. Now, TaxLayer knows the difference between the codes and knows which ones are voluntary and which ones are involuntary or mandatory. The most typical code is a code of D, as in David. That would be for 401 contributions. People that make contributions when they work to their 401k would end up with something in Box 12 with a code of D. So traditional IRA contributions are also eligible. They're entered in the adjustment section of TaxLayer. We just talked in the last slide about people making contributions and getting an adjustment to their adjusted gross income. Traditional IRA contributions can be made at any age as of tax year 2020. Now, prior to that, you used to max out at age 70, so you couldn't make contributions any longer. But as of 2020, there's no limit on the age. Now, there is, however, a limit based on earned income. You can't make a contribution to an IRA if you don't have earned income. If you had earned income at any age, you can make a contribution to a traditional IRA. Roth IRA contributions are entered in Form 8880. A Form 8880 should also be generated if the designated beneficiary of an Achieving a Better Life Experience, that's an ABLE account, and that's for persons with disabilities. If they made a contribution to their ABLE account, those are valid contributions. So Those are the eligibility requirements. Here's more information on what you typically find on a W-2 that would qualify somebody for this credit. An entry in box 12 will automatically generate a Form 8880 if the person's qualified. TaxSlayer can figure all this out based on the information that you enter and based on the code that you give it. An entry in box 14, however, is typically other information, and oftentimes it's information that's not used by TaxSlayer for doing any calculations. So in the case of a retirement plan, we do see situations, especially in Massachusetts, with teachers, for instance, where we'd find an amount in box 14 for their retirement plan. It may say RET or PEN with an amount where RET stands for retirement and PEN stands for pension. Now in TaxSlayer, you have the ability for anything that's found in box 14 to select from a list of items that the amount's for. You'd need to determine as a tax preparer whether this qualified a taxpayer for the retirement savings contribution credit or not. And that's based on whether this is a voluntary contribution or not. In the case of teachers, you have a mandatory retirement plan, so it's not voluntary. On the slide, you can see two options. One says retirement, not in box 12, carry to Form 8880. And the other says retirement, not in box 12, do not carry to Form 8880. You'd carry it to Form 8880 if it was a voluntary contribution. You would select do not carry to Form 8880 if it's a mandatory retirement contribution. Now, in the case of teachers having to contribute mandatory funds to their pensions, it would be the second choice, do not carry to Form 8880. Now, there are state and local government officials that also have mandatory retirement plans that you'd find in box 14. That'd be the same thing. They have mandatory plans, so they don't carry to Form 8880. If a taxpayer qualifies, the credit is either 50%, 20%, or 10% of the taxpayer's contribution for the year. The percentage claimed depends on adjusted gross income. Now, married couples filing jointly are eligible with adjusted gross incomes up to $76,500 in 2024. Head of household filers are limited to adjusted gross income up to $57,375 in 2024. For all other filers, the adjusted gross income must be no more than $38,250 to qualify in 2024. Though if a taxpayer contributed $2,000, the maximum credit would be $1,000 if they qualify for the 50% level. Now don't worry, TaxSlayer is going to calculate the amount. There's something called the Retirement Savers Credit Offset, where retirement contributions are offset by any distributions from qualified retirement plans in the current year and the prior 2 years. Now, it must be a plan where the taxpayer has the ability to make voluntary contributions to it. Now, here's an example in the slide. The taxpayer took a $1,000 IRA distribution in 2021 and made a $1,000 IRA contribution in 2023. Now, with no contributions or distributions being made in 2022. So in this case, the taxpayer could not qualify for the retirement savings credit in 2023. Again, it doesn't apply to mandatory retirement plans. I just want to show a W-2 form with a contribution made to a 401k plan, which is voluntary contribution. Note code of D in box 12 in the amount of $1,000. Box 12, code D, is the most common one we'll see. Those contributions, it's handled automatically. TaxSlayer will send them over to an 8880 form. Many state and local government employees have mandatory retirement contributions, which are reported with various codes in box 14 on a W-2. In this case, the code PENS, P-E-N-S, appears in box 14. You'll see PENS or PEN or RET pretty often. Now, as we covered earlier, if these are mandatory contributions, these entries should not carry to Form 8880. If voluntary, they should carry to Form 8880. Now, to determine what the code stands for and to determine if the contributions were mandatory or voluntary, just ask the taxpayer. want to show an example of a W-2. And at the left top, you see in 12B, a code of D. We've just covered that. So that would be for a 401k contribution made by a taxpayer. In this case, it's the amount of $480. So automatically, TaxSlayer is going to carry that over to Form 8880. It knows it's a voluntary contribution. When we're going through the return and entering our data, when we get to box 14, we talk to the taxpayer and ensure that whatever code is there, in this case it's for $500, that was a voluntary contribution to a qualified retirement plan. And so we need to instruct TaxSlayer to move that over to the Form 8880. So we basically say, it carries to the form, and that's in the amount of $500. So notice the 8880, on the right, and the total now is $980. Again, some of it carried automatically to the 8880, and some of it that we instruct TaxSlayer to carry it over. What about if there are contributions that aren't found on a Form W-2? Well, for a traditional IRA, if it's directly from the taxpayer to the IRA, then that's entered an IRA deductions page, and it carries to Form 8880. And for a Roth IRA, we use the Form 8880 credit entry screen in TaxSlayer. And a knowledge check. 2 of them. Mandatory contributions to a retirement account can be used to qualify for the saver's credit. True or false? And second, the saver's credit is non-refundable. Mandatory contributions to a retirement account can be used to get the saver's credit. That's false. All contributions must be voluntary. And true or false, the saver's credit is non-refundable? That's true. It's a non-refundable credit. So which contributions can be used toward the saver's credit? Roth IRA contributions? Contributions made by a full-time student? Traditional IRA contributions? Voluntary contributions to an employer 401k plan? And contributions by someone claimed as a dependent? Which contributions can be used to get the saver's credit? Roth IRA contributions? Yes, they're acceptable. Contributions made by a full-time student? No. Traditional IRA contributions? Yes. Voluntary contributions to an employer 401k plan? We've seen quite a bit of that. Yes. And then contributions by someone claimed as a dependent? No, not allowed. And that concludes this presentation on the Retirement Savings Contribution Credit.